stablecoin, or what's called a stablecoin, UST, that attempts to mimic the movement of the US dollar, but in this case failed to do so pretty spectacularly. And that's another thing that creates some concern amongst regulators and amongst investors.
Well, for more on this, we spoke to financial analyst Alex de Vries. He says the run on stablecoins is also putting pressure on other crypto assets.
A lot has been happening with regard to stablecoins, and in specifically the stablecoin Terra. Like other stablecoins, these coins try to maintain a stable value to a certain reference asset, in this case the US dollar. They try to create a crypto asset that itself is also worth $1 at all times. Terra is not like most other stable coins because most stable coins, they tend to keep a lot of reserves, so in case there are a lot of withdrawals going on, they can convert the money they have back to dollars and pay out their clients. But Terra is a algorithmic stable coin, and how that works is they operate together with a sister token called Luna, and they try to maintain a stable value by either destroying Luna tokens or creating more Luna tokens. Over the past few days, the value of both the Terra token itself, which is the stable coin that's supposed to trade for $1, and its sister token Luna started to decline rapidly. So that mechanism did not work anymore. People started taking out their money, and this mechanism wasn't enough to support creating new demand for Terra to bring it back to the original value being $1. Terraform Labs, the company behind the Terra stablecoin, also created a non-profit organization called the Luna Foundation Card to help maintaining the price stability of its stablecoin. They had more than 10 billion worth of bitcoins as a reserve that they could use to help maintain the value of their coin. And what they did is they started dumping all of their bitcoins in order to try and save the value of their currency. So 10 billion worth of Bitcoin was dumped just to try and save this currency, which didn't work out. The big problem here is that a lot of these stablecoin issuers invest a lot in crypto assets. So they keep a lot of crypto assets as a reserve as well. And at the moment, we're seeing a lot of money being extracted from these stablecoins, which means that the stablecoin issuers, to some extent, have to start dumping their crypto assets, which of course affects the broader crypto asset market. So the more these stablecoin issuers are pressured, the more they have to convert their reserves back into fiat money, and that really takes the whole market down. The entire cryptocurrency space is feeling the pressure from the decline in all crypto assets. Everything is coming down, crashing, and we don't know exactly to what extent these institutions will be able to survive. And parties like Coinbase, if things do go wrong, the exchanges themselves might have to use the funds they're holding for their clients to pay off their creditors in the event of a bankruptcy. So that will, of course, translate to potentially substantial losses for anyone who are holding their coins at these type of exchanges. I think we have to indeed realize that this also relates to the broad macro environment, where at the moment inflation is high, interest rates are going up, and investors are just generally offloading high-risk assets, which of course includes high-risk assets like crypto assets as well. And as long as that remains the case, then we can potentially face an extended bear market in these type of assets.